The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, and I hope all of our listeners didn't miss us too much on our little hiatus there. On Monday, I had to take the day off for personal reasons. It was indeed my birthday, and you can't record on your birthday, and looks like we couldn't get the gang together to record a show in my absence. But nonetheless, we are back, and none the worse for wear. My name, of course, is Mark Longo from the old OptionsInsider.com, as well as the growing roster of programs on the Options Insider Radio Network, and I am joined by a rotating cavalcade of stars today. Starting off with the auntie, indeed the grandpa, indeed the crazy auntie grandpa Mike from Know Your Options Inc. Mike Cavanaugh, how are you doing? Welcome back to the program, sir.
I am well, thank you very much. It's great to be back on the show.
It's been, I believe, since the great live fiesta that you have been on the program.
Yeah, I think that was the last time I was on, albeit briefly, but I'm ready to go the full length today.
And I hear that you welcomed yet another addition to the ever-expanding Cavanaugh brood. Congratulations, sir. Was it a boy or a girl?
It is a girl. She is 3 weeks old, Reese Harper. Everything so far so good.
Awesome. Congratulations. What's that now, 2 boys and a girl, or what's the mix?
That's a boy and 2 girls.
Oh, so you are indeed outnumbered.
I am outnumbered, and we dropped from a man-to-man to a zone on defense here. And we are now we're a proud owner of a minivan. We popped
Once you've gone beyond 2, I think you kind of have to do that, don't you?
Yeah, I mean, there's just it's interesting. I know this is an options show, but the market for 3 kids in the vehicle market is you either pay through your nose for a 3-row SUV, or you bite the bullet and you lose your coolness and you become your parents and buy a minivan.
They kind of know they've got you at that point, don't they? It's like getting snacks at the movie theater. They know they've got you. If you got 3 kids, they know you're knocking on their door eventually. So
yeah, I'm pretty much convinced that the SUV is for the mom that has the money, that doesn't want to lose her youth, that wants to remain cool. It's a complete emotional thing. For me, the dad, I looked at it as, hey, this is pretty practical, as my wife, tears ran down her face when we were signing the document.
That's ironic. Usually it's the other way around. Usually it's the father saying, where has my treasured manhood gone that I now am behind the wheel of a minivan?
I'm actually trying to get my wife to get a minivan because I like to do a little fishing on the weekends, and it's a lot easier to get all the gear in a minivan than it is an SUV, actually. We already have one gas-guzzling car. I have a Dodge Charger, so we're looking for something that burns a little bit less gas.
And that voice, listeners, is none other than Big Rob Kurzakowski, filling in on the rotating Options Express hot seat. And I think you as well haven't been on the program since the live event, or have you been on once since then? I'm trying to remember.
I've been on one since then.
Once, okay.
Usually Mondays. It's like every other Monday is when I come on.
So we have a rotating panel today, and we'll have probably be joined in progress by the old Seabass. So we'll leave a slot open for him, and with the team mostly assembled, we will roll right into the trading block.
The trading block.
All right, and welcome to the trading block, and it was an intriguing day on the street today. There was one name in particular that seemed to resound in everyone's ears overnight and into the early part of the session at least, and that, of course, is Apple. Big news hitting Apple today, and, of course, that hit the street as well. We closed on the day, S&P down about 18 handles to 1159, the Dow down 170 to 11,149, and the good old NASDAQ down 48 handles. The tech-heavy NASDAQ, not surprising, faring the worst of the bunch, down about 2% to 2419. And the good old VIX cash continuing the seesaw movement up about 3.86 points or 10.5% to 39.76. And as we alluded to, the bulk of this downturn, it was a twofold move. We saw obviously the jobless claims numbers definitely giving the market a bit of a spook, but of course the resounding news, the news that was on the cover of every paper this morning and everywhere else, was of course Steve Jobs stepping down as the CEO of Apple. And I'm glad we have both the KYO guys and, of course, Rob, the tech man, on from Options Express as well to discuss this. I wish we also had Tim on, Bobby, because I hear he's been slinging some size out in Apple recently, and I'd like to see how he's faring in there. But, yeah, a lot going on in Apple. And Uncle Mike, we'll start with you. I know you guys are, at least Tucsaw's clients are fairly active in Apple these days, so I know you were rolling up some puts last we spoke to him. What's the plan now? Are you going to pretty much wait and see, hold the underlying, hold the puts, and see what happens? Are you going to maybe tighten up here? Are you going to use this as an opportunity maybe to write some upside because you think the bloom is off the rose in Apple? What's the plan here?
Bottom line, short term, this doesn't change our outlook on Apple. This wasn't a huge shock. I think Steve Jobs was diagnosed with pancreatic cancer in 2005, and he sat out for a little while and came back. And I think that's when investors started asking themselves, what happens if Steve leaves? And if the investors are asking that, you can at least make the assumption that the board of directors at Apple has been thinking about this for 6 years. And I think Mr. Jobs got a liver transplant in 2009. So, this shouldn't come as shocking news. Longer term, what does it mean for Apple? We're going to have to think about it. Apple has had a very, very nice spot in our portfolio. We're still long Apple. We're still long the October 370 put, short the October 395 call. So short term, we're not really concerned. We haven't rolled up, haven't rolled down. And in our weekly investor meetings over here at the KYO in the war room, we're not concerned yet. Long term, you got to kind of be concerned if you're an Apple junkie long term. Steve Jobs represents more than just a technician, a manager, a process engineer for Apple, and how they've been so profitable. He's a creative genius. He'll send an idea or a project or a product to his team of engineers, and they'll come back with something 3, 10, 16 times until Steve sees what he wants to see. And he's been able to clearly state his vision for each one of these products. And Apple's more than just a tech company. It's Steve Jobs' creative genius that has made that. So where are they going to be in 5 years without Steve Jobs' creative genius is the question. Right now we're not doing anything, but it's really tough to say if this I think the new CEO's name is going to be Tim Cook, and he was the COO. It's hard to say. We don't know who the guy is. Can he wear the mock black turtleneck and get the Apple junkies going like Steve did? We'll see. But
he's done a few events, and I don't think he's gotten the faithful as motivated. Because, when you talk about the CEO of Apple, it's a different type of beast than, the CEO of HP stepping down or something like that. Because it is such an iconic role, and it is such a you have such devoted faithful for that product, and you talk about a guy who's run that company essentially like North Korea. I mean, there's the joke is that he approves everything down to the T-shirts that they sell in the Apple stores. So I mean, this guy has had his finger on the pulse of this company, hook, line, and sinker for the better part of the last decade, and so obviously they planned out some things beyond him, and there obviously are bright people there who can continue that legacy, but still he is intertwined with that legacy just like Disney was with Disney. And when you have a iconic figure like that stepping down, you have to kind of wonder long term if the bloom is indeed at least off the rose in Apple, if it can continue to be the juggernaut that people like. I thought you guys had underlying as well. You guys just have the options?
Oh no, we own the underlying. Yeah, I'm sorry I didn't clarify.
Oh, okay.
We're collared.
Okay.
We I think the last earnings call is when we just had the puts on. We're long the stock. That's big risk in our world, where we didn't have the call on, and we picked the right direction. So after Apple jumped up to 400, I think we were long the October 325 puts, long the underlying, not short the call, and then once we jumped up after the earnings report, we recollared everything where we sold the 395 call, bought the 370 put. So we're okay with where we are on Apple right now. Next Tuesday when we reconvene the meeting of the minds over here to talk about Apple, we might take a longer-term look to say, hey, we might want to pare down some of the underlying position longer term, but right now I think we're still pretty happy with Apple.
And Rob, not to dive too much into the Xpress Block, but what were you seeing today in terms of paper flow from your customers coming out on Apple? Were they dumping en masse? Were they picking up puts? What were they doing out there?
I think we had definitely on the open at least quite a bit of people dumping calls and actually buying puts. As is usually expected, anytime there's negative news, it seems like the paper comes rolling in. Although a lot of traders did kind of learn from previous health scares with Steve Jobs, we saw a lot of people canceling orders before they open, because we have to here before the open, after we begin our submit process, the cancel button disappears on market orders. So after the news, I think some of these people, placed orders shortly after the close yesterday, before the job news, just Steve Jobs news. So we saw quite a bit of people just kind of canceling orders and just letting things play out before they took action. Surprisingly, on the open, we didn't have as much activity in Apple as we do after, say, an earnings announcement.
That is surprising. And I think also surprising is the fact that the stock closed at $373.72 today, down $2.50 or about 0.7%. It didn't even close below where it was trading a couple of days ago. So the iconic CEO steps down, and the stock barely registers a blip. It got down to 365, I believe. Actually, in the after hours last night, it got down around 355, I believe. And then it opened up around the 360, mid 360 level, and it seemed to just kind of vacillate and then rally from there. So obviously the market has digested this, and/or Apple has done a good job of spinning this to the point where, hey, he's still going to be chairman, he'll still be active, and kind of taking the sting out of this. Because you're right. I mean, this thing didn't even close below where it was trading 2 days ago. That shows, that to me is bizarre. That such an iconic element of that company could step down, and we don't even hit the 350 handle.
Steve Jobs is the innovator. He's already set he already has the playbook set up for the next year or so, year and a half. And one thing he doesn't quite get enough credit for is he actually hires a lot of talented people. It's not just him innovating, it's him hiring the right people, and those people are still assembled. Tim Cook, he's a guy that makes sure the clocks are all on time, and I mean he's heavily involved in the supply chain. So basically all the part manufacturers, the actual production process, strategically getting the product out there. That's what he's good at. Innovation, it remains to be seen. It depends on if the Steve Jobs culture lives on at Apple. I think it's still going to be a very successful company. That's the reason why I think that longer-term traders probably didn't panic as much, just because they figure they have some time, because the game plan is laid out. They're going to digest this, see what kind of new products, new innovation is already in the pipeline, say 6 months from now. Where if there's really no beyond the iPhone 5 and the iPad 3, if there's not a whole lot out there, I think at that point traders may get a little bit spooked. But for right now, I think that there's no reason to panic. It's still positioned very well, and they have a kind of a cult-like following with their products. So I don't think that just having Steve step down is going to be that big of a problem. But remains to be seen. It's going to be six months from now, a year from now, when we're going to get a real feel on where the company is heading.
So he makes the parts run on time. So he's the analogy then is he is Mussolini to Jobs or Stalin. Then that's what he is.
Yeah, basically. Yeah.
Well, of course, the other big move today, and fortunately you have both of you on here for this one, is I'm sure Uncle Mike would also like to be here to chime in on this one, was of course in the metals, in gold in particular, where the CME has once again come in and cut the knees out under an exploding precious metals market with a change to the margin rates out there. So, Rob, why don't you dive into a little bit of this one, what we saw today in terms of gold and, of course, silver in our metals/commodity rundown.
Well, gold has been kind of battered. Not only do traders, some traders, even gold bulls, they had to step back and see where gold is heading. You move up to 1900, and we're at 1500 just a few months ago. It's too much too fast. I think that a lot of traders still believe that we may be headed toward 2000 by the end of the year, but the market went completely parabolic. So the CME raising the requirements just gives a lot of traders incentive to get out of these positions. I actually thought the CME should have stepped in earlier. I think that they're a little bit late on this. I thought they would have learned from the silver debacle a few months back, where you just had this massive wave of liquidations, which turned into a real fire sale where people were getting just whipsawed back and forth, and stops getting run and things like that. We would have liked to have seen this maybe $100 ago, or $100 before, or $200 before the peak, where they actually step in and are a little bit more proactive.
Yeah, you think they would have learned from what happened with silver, because they took a little bit different approach with silver, and of course they cut the knees out of that market quite as bit as well. Not as dramatic of a downside move in gold as a result of this move today, though.
No, not at all. But we've had precious metals have always been a volatile market on a percentage basis. So I think again the CME. They're looking at their option. I think they use a lot of option volatility, and they're planning for their requirements. And sometimes the vols on gold options will actually move a little bit late. I think that they need to start taking the actual full contract value into account a little bit more when they start seeing prices climb, because the volatility may not be jumping as much, but you're dealing with a contract that full value is every $100. You're talking about a huge jump in the actual full contract value. I think somewhere down the line, I think we're going to have to break up some of these gold contracts and maybe into smaller contracts. They've already had the micro gold, the cash settled.
Let's say they have that mini/micro contract already. That doesn't do it for you.
No, I believe they're called the mini metals. Thank you.
And listeners, that of course is the Seabass, good old Mark Sebastian from Option Pit, joining us late, but better late than never. How are you doing, Mr. Sebastian?
Oh, I'm doing great. I just got my ears lowered. That's what. Let me tell you, aside from volatility, hair care is probably my other passion.
And of course, managing the mini metals.
Well, managing 80s hair bands and Transformers movies, of course, as well.
We're in the middle right now of the metals rundown, but before we go on, I'll give you a chance. You missed our great Apple rundown. So you have anything you want to add in to the Apple/Steve Jobs fiasco before we finish up the old metals?
The only thing I'll say is I wish there was more hyperbole available about Steve Jobs.
Yeah.
The greatest CEO of all time ever. All right? Our history's best, most creative mind ever.
Turned Apple into the Beatles of this generation is another one I saw out there. It's just,
yeah.
pretty
really?
funny.
I missed that one. Yeah, I've seen the one bandied about a lot recently that he has his name on 300 plus patents, and I thought to myself, well, Thomas Edison has somewhere well beyond that as well, but it was all employees who worked for him that created them, and he stuck his name on there. So I'm assuming Jobs did something similar. He didn't go out there and actually tinker in his garage and create 300 plus devices.
And I will remind people that, he was heavily involved with Pixar. And after he left, last I checked, they've been coming out with some pretty decent movies without him. I think somebody brought up this comparison that it's like when Walt Disney died, but I don't know if I buy that. I see this as more of, the thing I would say is this depends on who the successor is, because you take a company like Microsoft, grows under Bill Gates. They put in Bill in Ballmer, and, it hasn't done anything ever. But then you take a company like, GE that had many, many, many CEOs, and then Jack Welch grows it, and then Immelt does the same. Or IBM, where that company it had a great founder, blew up, did great, and then, the CEO had the guts to step in and say, you know what, we're out of the computing business. Nobody would have expected that guy, nobody would accept Palmisano to have come up with that, but he did, and it was pretty impressive.
You've been playing it all on Apple lately. I know you've been heavily short VIX. What about heavily short Apple vol here at this point?
It was really elevated. The play I've had on that I wrote up for the street was the 360, 90, 420 October butterfly into earnings, and I still like the play. They're about to release the iPhone 5. This is they're going to do the classic Apple product release, which is run up the stock, and then when the announcement gets made, torch the thing. And I'm looking forward to that. So that is what I'm playing.
I guess the question is, they kind of cushioned this by saying, he's still going to be chairman. So they definitely cushioned the blow somewhat. My comment is, if he's so sick that he's even going to miss the iPhone 5 or whatever announcement in a couple of weeks, his health is fairly dire. So then what is the sell-off if and when he does move on or shake off this mortal coil? Is that when we see the big Apple sell-off, because then the guiding hand is no longer on the reins, even as chairman?
I think it matters more about the pipeline than anything else. So that's really all that matters. And as long, Apple's they're almost like a drug company that doesn't have to worry about FDA approval. As long as
because all of their customers are addicts, is that what you're saying?
No, they've got a pipeline, and as long as that pipeline remains stuff that people think is going to sell, every time they try and roll out ITV, everybody rolls their eyes and says, "Who cares?" Right? How many times have they tried to roll out their ITV? And how many times has nobody used it? And so as long as they keep that product pipeline, they're going to be fine. But if that starts to slow down, that's all people really are going to care about.
I'll pipe in there. I kind of disagree with that, just from the aspect, what I look at an investment and what I see investors looking for, whether it's a startup, a stock, venture capital, is you kind of look at two things and the rest is just fluff. And it's the financials and then the people that are going to execute the plan in the future. Apple might have the financials here, but what's in question is, are they going to have the right people moving forward?
Yeah, no, right. That's true.
I don't see short term. I don't see any damage. I think long term, Steve Jobs' shoes are too big to fill. And if there's talent out there that can fill Steve Jobs' shoes, it's not going to be an Apple.
Exactly. Then that's the thing I have. Now, I'll say this last thing before we move on, because we are indeed an options show, not a corporate governance show. But this guy has held the reins there with an iron fist for so long that I can't imagine anyone who came up underneath him was really a standout, risk-taking type of leader guy. They probably were, as Rob alluded to, more of the managerial type, and I think it needs a visionary at the helm to come in, and they're not going to get that internally at Apple. And Rob, we did cut you off there, so let's dive back into the old metals. We were hitting gold, and I know also copper has had some interesting movements as well. That's driving a lot of interest in copper as well.
Yeah, well, copper is something that doesn't necessarily trade a lot here in the U.S., and certainly the option market is pretty dormant in that future. However, it is a really good economic gauge. It's probably a better forward economic gauge than most of your economic numbers out there, your leading indicators and so on. And copper actually kind of broke out of its range here. It was really tightening around the $4 mark. I think that the world is now not as concerned about maybe having this whole doomsday, the world is going to end tomorrow approach to trading. I think that the equity markets certainly maybe a little bit oversold in the near term, and if we get above 1,200 in the S&P, it's certainly a positive sign. I think that whole grim outlook is starting to look a little bit rosy. Not having any terrible banking news out of Europe for a few days has also kind of helped out. So, maybe copper is going to show us that maybe we're getting maybe we bottomed out here, at least in the near term in the equity prices. So, it's always a very good gauge to watch.
Yeah, I think judging by what we're seeing on our own site, we're seeing a lot more interest in some of the non-sexy metals like copper. So we'll see if that continues to be an interesting gauge. And of course, speaking of gauges,
I would like to throw out just real quickly that I don't see 1,200 as the real number. I think 1,250 is that resistance point that holds up the market, because that's basically where everybody's long from, and a lot of people are long from around 1,250, and so there's going to be heavy settling pressure between 1225 and 1250 as people try and cut losses. So I actually think that's where, if you see some resistance, there's going to be some real resistance.
Speaking of resistance, I had an interesting call from a reporter the other day, and I've heard this question a couple of times, but it's kind of bandied about again since then, about the notion of scalping gamma, particularly negative gamma, if that's exacerbated a lot of the extreme down moves we've seen over the past few weeks. I thought it was an interesting question, especially coming from a reporter where they're usually not that nuanced on these types of issues. I thought it was a fun one to ponder. It might be a good topic maybe for a future show. But I guess really quick, what do you guys think? You guys think that obviously we did some extreme moves to the downside, most of the market makers are the ones who are actually scalping and hedging their gamma. They're predominantly short to the downside. So those downside gamma negative scalps, you could say, could have exacerbated some of these moves we saw lately. Agree, disagree?
I think it evens itself out. So I'm not a big buyer.
I certainly think that some of the volatility, the massive wave of put buying, was a lot of people that were just been picking or selling puts is picking money up off the ground, kind of liquidating all at once. And I think that certainly had a negative impact on the market. It's like picking money up off the ground until you realize that you're in front of a concrete roller. When the market's
but those are more liquidation closeouts than gamma scalps. I don't think most of those customers are savvy enough to know they have negative gamma and hedge it accordingly. I'm thinking more of the professional side who are actively trading and or scalping and or hedging their gamma. But yeah, I thought it was an interesting question to ponder. Before we do roll off, speaking of gauges, of course, the old fear gauge up again about 11%. Mr. Seabass, have you had a chance to roll out of your shorts yet? Are you still doubling down on the longer term horizon?
Oh no, I'm still. I love stuff like this. Although interestingly, people are going to look and say, "Oh my gosh, look how crazy it was today. Vol was up. The futures barely budged. They hardly moved." So. The anticipation is that we're kind of at the end of the line, I think. The VIX was up big today, basically on betting on kind of tomorrow's news, which I think is probably a little overblown. I'd be shocked if we move as much as they're actually pricing. For instance, I think you'll like this. The SEP 1160 straddle is right around $80. A full third of that is supposed to go away tomorrow, as the one-day straddle is about $27. So, yeah, I just am not buying.
Pricing in that Bernanke put.
Yeah, oh yeah. So, I think vol's a little overblown, and it's interesting. We've had really high intraday, and this is kind of goes back to volatility views. We've had these big, close movements, but really. Since we tanked on that since we really tanked, all right, on the Monday after after S&P, if you throw out the last 15 points that were kind of end of day fakeness, we've really stuck between 1120 and 1170 pretty well. I mean, we've been in a tight range. Now it's been kind of big moves up and down, but really the kind of high-low, not nearly as scary as what it's kind of adding up to be, in my opinion.
Yeah, I think it's definitely been a little more range bound once you get outside of the extreme outlier moves, and outside of the, like you said, those end of day, last minute swings in one direction or the other. Aside from that, I think we've had a little bit more, I guess you can call it, not predictableness, but range bound, I suppose, is a good way to call it. And of course, with that, we're going to close out the old trading block and roll right into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OX Radio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Xpress Block. This is, of course, the portion of the show where we let the OX boys run wild. And today's person-in-chief for the Run Wild segment is none other than Big Rob Kurzakowski from Options Express. And Mr. K, what do you plan to discuss today, sir?
Well, not only did we have a lot of activity in Apple today, but Bank of America probably actually generated more order flow just because the options are so cheap now because of the stock's been so battered. So with Warren Buffett stepping in, a lot of these people that were just kind of bottom picking and buying lottery tickets and calls, this is like an early Christmas for them.
The Buffett bump.
Yep, those two stocks probably had more order flow than anything else. The SPX and RUT, we've seen a little bit more activity than we had previously. A surprising number of risk reversal trades, people trying to get long again, selling puts below this most recent kind of base here in the SPX and buying calls, expecting the market maybe bounce back a little bit. So it's nice to see traders taking a little bit of risk on, although it is not awfully risky proposition. Selling puts just below that support area, especially given the volatility that the market's seen. So
I'm glad to see not all the put sellers have blown out over at OX. There are still a few alive and well to fight another day.
Absolutely. As far as what we have going on at OX, we've actually on the verge of finally releasing our iPad app. I actually personally got to test it out. Yes, and it's a larger, more resized version of it, but it is much snappier than the mobile app. Obviously, it's sized perfectly for the iPad. The only hiccups I really encountered were kind of a sizing when you just look at it in portrait in the balances page, but as soon as you rotate it landscape and rotate it back to portrait, it fixes itself. So that should not be a major problem. That's actually more of a design hiccup. So, but everything else is running smooth. I actually, given that or Extend, I'd rather use that just because it's lighter. It's not as powerful as far as the number of tools. I see that the Extend thread at the Options Insider has gotten some comments recently.
Yeah, the Extend lovers are out in force the past week or two, it seems.
Yeah, and I think that with the imminent Schwab integration, I think we're probably going to have a little bit more development resources to allocate toward that. It is not necessarily as fast. I think that just having a very graphics heavy interface like that, it takes away from some of the speed. I mean, anybody that uses any program, you take a very bare bones program and run it side by side with something that's graphics intensive, you're going to see a huge performance difference, and it's something that I've suggested. And in addition to posting things on message boards, we do have a suggestion box and strongly encourage you to use it, because if our developers don't hear anything, they're going to think everything is fine and dandy, and they're going to work on maybe adding other features to it instead of working on the speed. So
and once again, what's the ETA for this new the new iPad app? When can listeners expect to have it in their hot little hands?
And from what the guys in development told me, that little sizing thing was like a couple lines of code, so I'm sure it's been fixed by today. So now it's going to be sitting here and waiting for the boys at Apple to approve it. So that approval process is extremely unpredictable.
Yeah, you gotta love that. We just had some of our shows go through that approval process to add them to the iTunes store, and it's a completely no control process whatsoever. You just kind of throw up your hands and wait.
It's so random. I mean, I know people that designed smaller apps and literally had them approved, a matter of a couple days. And I know people that have had very solid, well-designed, professionally designed apps, and have had them sit there for a month and not heard anything back. It is a crapshoot with the approval process. So hopefully they're able to expedite the approval of that, since we already have an app there, and it's an iPad app version of our mobile app with a couple of new features and better spacing.
Yeah, I think that'll be a lot of our listeners. I think will be looking to jump on that as soon as that's released. And I will reiterate yet again to the OX dev team: they need to just grab our RSS feed and put the show into the app. You're already a part of the show anyway. It makes perfect sense to have your listeners not to have to go through iTunes and all these other external hoops to download it. Just have them stream it right from the OX mobile app on the go, on their commute, on the way to work, and then they could trade in and out of things while they're listening to the show. It's a simple thing to do. I'm looking forward to that in version 2.0 of the iPad app.
Especially because it's an option-centric site, so I mean, if we can also probably RSS the morning roundup and other parts of your site into there as well. You don't even need to pull the text. The text can be a separate thing. That could also be useful, I would think. But yeah, just the audio has a separate RSS feed, which is simple to feed through and pull into that. So yeah, you know all those guys on the tech team, Rob. I'll expect you to kick that up the chain a little bit for them. Light some fires under there, sir. Get them motivated. But I appreciate that update, sir. I think a lot of our listeners will be excited to hear that. And that is going to do it for the old Xpress Block.
Around the block.
All right, and welcome to Around the Block. This is indeed the portion of the show where we discuss what's coming up on our horizons. And starting off in the Around the Block section, obviously a lot of people, pretty much everyone right now, is looking for that Bernanke put, seeing if it's going to indeed be in place, or if he's going to let the market stew in its own juices. So starting off with you, Uncle Mike Cavanaugh, what are you watching? Obviously, Bernanke, what's your outlook / prediction, and how are you positioning ahead of Mr. Bernanke tomorrow?
We're always hedged. We always have portfolio insurance on. If we make any adjustments, if the market goes down, it'll be to buy some more stock. If we take in some cash from selling some puts. But I mean, what can Bernanke say? Hey, there's trouble in Europe, and we've lowered interest rates as low as we could. We've done quantitative easing. We've pumped trillions of dollars into the economy. Hey, and I just saved some money on my car insurance. I mean, I don't really know what bullets he's got left in his.
Yeah, I mean, is a QE3 really a viable option at this point? I mean, I know people are clinging their hopes to that, but that seems to me a pretty low delta option at this point.
Low delta? I mean, but what could it really do other than, hey, we saw what QE1 did and QE2 did. It seemed to give a perceived, boost to the market, but it only takes a little bad news to knock 200 points and, 2,000 points off the Dow. So QE3, what do you expect? Hey, we're gonna shoot the S&P up to all-time highs and knock it in half in 6 months. I just don't see Bernanke talking about QE3, and if he does, personally, I think it's a mistake. But if he does, we might be listening to some more of those little cartoon characters on YouTube talking about buying the dip, because that's really what all of the interjection in the market here did. It gave you a short-term boost, but the piper's still playing the flute. And every time any bad news comes out, we're seeing the volatility the sell-offs come off pretty quick. So I don't know what he can say to make this rosier. He can say whatever he wants, but it's more lip service than actual, propping the market up, so to speak.
Some people like a little lip service every now and then. And Sebastian, don't say anything. Don't take it to a dirty place. I know where your mind was going, sir.
I would like him to come out and say, why would I do something like QE3? The economy's maybe a little weak here, but everything I'm looking at says that, we're going to get through this pretty well. That would inspire far more confidence than saying we're doing quantitative easing.
I agree with that. I mean, if he came out and said that, I would be shocked, but I think it's what it needs. We need a little dose of reality to say, hey, things aren't great in D.C. There's not a whole lot of leadership that are getting things done. Not to go full political here, but, we need creation. We need innovation. There's a lot of money sitting in cash, and a lot of people aren't creating things because they're afraid of what the future holds. So
say what you will about our golden boy Steve Jobs, but he's got, $75 billion in cash he's doing nothing with?
I think he's got more in cash than the U.S. Treasury.
Yeah. Oh, easily. I think Bill Gates personally has more in cash than the U.S. Treasury at this point.
I think my 18-month-old does.
He could buy the Dakotas right there and the Carolinas.
Turn them into Apple North and South. But yeah, Sebastian, so you're thinking we're hitting, regardless of what Bernanke says tomorrow, we're taking $30 out of that straddle post-speech?
Well, it expires tomorrow, so it has to go somewhere. I just don't see – I think that this run-up in vol over the last 3 days and the expectations for some sort of big move are completely overblown. I think 1150 sounds wonderful to me as far as where we belong. I don't think we're at a bottom of the barrel flash crash, Europe's going to explode market, but I thought 1370 was way overdone. I feel comfortable here. Somebody says, in between 1150 and 1250 is where I think the market should be priced. I think that I am a short and intermediate major bear of volatility right now. That's kind of my opinion.
I'd agree with that. The big difference right now between 2008 and 2011 with this sell-off is, the amount of leverage and the amount of investors in the market then, it gave you that big whoomp lower. We've seen, I think about an 18% retracement here from the top. Companies, there's not a huge amount of top-line growth in companies, but you've got companies that are making money. And the amount of leverage that's not in the market, the amount of cash on the sidelines, I don't see a huge retracement from here. We could get a slow, death by 1,000 cuts, move lower, maybe another 5, 10, 15%. But I think the 1,100, 1,050, 1,200 range where we're sitting right now is probably a fair value for the market. I think there's just uncertainty in Europe. I heard somebody the other day compare the 2008 debacle with the investment banks. They're comparing banks to countries now, and Germany's the U.S. Treasury equivalent in 2008. So do they let one of these countries fail, and then we see how sick and interlinked the whole economy is, the global economy, and do we take it down another 10% and rally from there? Perhaps. I just still see so much money in cash. We start becoming the old American business person, American patriots that we are, and we start innovating and creating, and I think you see this thing turn around. It's just a matter of time.
I think there's
4 months to 4 years.
I think there's definitely something. You never know when something's new on the horizon, and I think we're getting there. Their battery technology, all sorts of just crazy stuff is really starting to develop every day. And as long as we can keep talent in the United States, long term we're going to be great. Short term, hey, you know what? Mike and I and Mark, we've all kind of basically have already accepted that we're not getting Social Security. Now, get on with it. And
yeah, I made that piece a long time ago.
So get on with it, and let's have a real answer for everybody. That'll do a better job of taking uncertainty out of the market than anything Ben Bernanke could do.
Who's the iron-willed, no future politician is going to step up and say, okay, Social Security goes up to 75 tomorrow? Who's the guy who's going to do that?
Sebastian or you, Longo. Clearly.
I don't know, Uncle Mike. You've been pontificating here, sounding a lot like a politician on the old stump speech right now. I don't know. You might have some. I'm seeing a little state senate in your future, sir, or something along those lines. So yeah, everyone and their mother positioning ahead for the potential, or perhaps, I guess it's a very low delta Bernanke put tomorrow, but nonetheless, people are positioning for that to potentially materialize. I don't think we have a big sell-off if that isn't the case tomorrow, maybe a minor one, but I don't think the savvy money is really expecting too much out of him, like you said. I think most people know he's fired all of his bullets, and at this point it's really just rhetoric what he can do.
Yeah, I mean, look, you make a good point there, the savvy money. I mean, they downgraded U.S. debt, and the interest rates went down, and the price of the U.S. Treasuries went up. I mean, they could say the United States is worthless, and everybody will look at themselves and say, yeah, but I'd still rather hold their debt than have my money sitting anywhere else. So the street, the market, the smart money, the savvy investors are still saying, hey, I can hold European debt, I can be in cash, I can be in money markets, I can be whatever. You know what? I still think being in U.S. Treasuries is the safest bit. That's a calling to me. That's, hey, America, wake up. We got to take our economy back, and we got to do it the way that we've always done it. We have to create, innovate. We have to roll up our sleeves. We have to do what Sebastian says. And hey, I realized that in 20 years, even though I've been paying into Social Security, hey, I may not get it. Big deal. I'm done crying. I'm going to roll up my sleeves. I'm going to create jobs. I'm going to create ideas, and we're going to move forward. So it's just a matter of time.
I think, ironically, all three of us here have the fortune, or perhaps misfortune, of also being entrepreneurs / self-employed. So we've already taken a lot of that burden on our shoulders as it is. We're doing what we can for the economy, damn it. It's time for someone else to jump in and help us. But with that, I tend to agree as well. I think the levels here are acceptable, if not perhaps permanent. We could vacillate around these levels for quite a bit. Follow the old VIX futures route and perhaps price in or prepare for some more short-term upside spikes in the VIX, but long-term plan for a downside sell-off and position yourself accordingly and take these opportunities to roll whenever possible. All right, that is going to do it for the option block today. I want to thank all of my cohorts for joining me on the show today, starting off with you, Auntie / Uncle Mike. Really quick, what's coming up at KYO you want our listeners to know about?
Yeah, we've got a lot going on. We're going to start doing some fireside chats here where we bring groups of investors into our office, 10, 15 at a crack, sit down at the conference table and just kind of go over what we see the market doing, what the strategies we're implementing are, and we're going to start, bringing our clients in the office and showing them around. So Dr. George is out in Skokie today at the business event at the Holiday Inn at 5300 West Toohey. He'll be there till about 7 o'clock tonight. If you're in the Chicago area and want to stop by, we got a booth. He's shaking hands and kissing babies. We've got a potentially, we're looking into building one of our strategies into an ETF. I'll keep you posted as the times get closer. And that's about it. So we got a lot going on. We're very excited. We've been uber busy. We've been getting referrals from clients that, are happy that they're not wiped out, not even down 10%, whatever, that, we're hedging equity portfolios. We're insuring equity portfolios using options, and this is when we're busy. This is when our clients see the real value of what portfolio insurance does.
Yeah, these are the boom times for KYO, so to speak. So if you're looking for some defensive action in your portfolio, or you want someone to take the reins full time for you to allow you to focus on whatever it is you do on a day-to-day basis, and by all means, give Uncle and Auntie / Grandpa Mike a call over at Know Your Options or visit kyoinc.com. Thank you, sir, for filling in for Uncle Mike, and we'll see you again soon on the show.
Always a pleasure, guys. Have a great day.
Have a good one, and congrats again on the new edition. And, of course, Mr. Seabass / Sebastian / Mini Metals / Greasy Meatball. What is coming up over at OptionPit.com, sir?
Well, I've got this SIBO webinar, How to Trade the VIX, coming up on the 10th. And then immediately following that is my 5-part class on trading volatility products. So it'll be VIX ETNs, Volex. It's going to be, we're going to talk about Volex.
I was going to say, the Volex boys will like that one.
Yeah, no, they're going to love that. Well, you know why? I think it's important to learn this product because, one, currency people should be looking at it, and two, when they roll out an S&P, a SPY-based, NASDAQ, or Q-based, or one of those, I think it's going to be a very popular product.
Yeah, that's going to be a home run. They're just chomping at the bit to get that out there because so many people are, as popular as the VIX is, so many people are tired of the various, once they become a little more sophisticated, they understand the shortcomings of that product, and to have something that could answer most, if not all, of those shortcomings in one realized type product on an underlying they actually trade, that would be a big hit for them, I think.
Yeah, no kidding. So, we're going to be covering all those different products at once. And, it's going to be it should be really great. The SIBO course is $395. My course is $395. But sign up for the SIBO course. I'll take $250 off of my course. So you get the both done for around $500. If you just want to take my course, use code OI2011 and you can get that course for free. Now, the most important thing. Mark, I don't know if you know this, but I've been nominated for an award.
The little birdie did tell me this, and I must tip my hat to you, sir, that it is indeed a good thing. I always like the ones where you get to put your hat in the ring and say, hey, give me an award.
Yeah, so no, we just I didn't even nominate myself. So a couple people I know did, but I didn't. It is Chicago's most valuable blogger. I'm under the everything else category because they didn't have one for me.
I love that category. That cracked me up when I saw that. Everything else category.
They were like, they're like, we like your blog, but we don't have someplace where it fits. So that was where that was. Yeah, no, go to, the link is will be on this show, and vote for me. If you're within the sound of the voice, you can vote every 24 hours. Give me a vote.
Yeah, send some love Mr. Sebastian's way, and maybe we can send a few more clients and or students his way as well by getting that blog up there, and we'll do our bit on Options Insider to make sure that voting link is prominently mentioned. And of course, we don't talk about it enough on this show, but you also do the expiring monthly, and I encourage our listeners to check that out as well. You can go to expiringmonthly.com. We also have links on the Options Insider where they can find it as well.
Yeah, use the Option Insider links. That's the easiest way to get there.
Yeah, I've been encouraged to see that some people have been doing that, so it's good to see that endeavor is being appreciated by more than a few people out there. Well, that is going to do it for the Option Block today. I want to thank all of our listeners out there for downloading and streaming and subscribing to this program. And speaking of subscribing to this program, we've launched a number of new feeds in the Options Insider Radio Network in iTunes over the past few weeks. So, of course, you can find the Option Block in there as a standalone program right now, as well as volatility views and, of course, the long and short of futures options that we do with the folks over at the CME. There's more shows coming, so if you want to subscribe to individual shows in addition to or in place of the main network feed, you can now do that in iTunes. Just search for that, and we're working with them also to create an artist page for our network, so that you can find all the shows in one place. All right, that's going to do it, and we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.